Good morning, everybody. I'm going to do a little intro here before I start into this video. This is going to become a little bit of a series, I think, as I evolve it and kind of figure out how I want to produce this and what I want to go in through with this. So as you can see, I got the fire going behind me, just for a little fun ambiance intro. But basically, we're going to be going into liquidity pools today. I'm not going to go into the nitty-gritties, show you how to use them or anything like that. It's more going to be, this whole series is going to be about how to strategize your portfolio, really. So it's going to sound like a lot of financial advice. I've worked in the banking industry for a long time. I've had some chats with people, and I don't know if we're quite managing our portfolios with purpose, I guess is the best way to put it. And so this video series will go through some different ideas anyways, and some thought processes that hopefully to start your mind thinking about these things and being a little bit more proactive on how you're managing what you're doing, and maybe doing a better job diversifying in different asset classes, kind of thing, so to speak. Basically acting like a real investor and trying to create a business out of what you're doing in DeFi, because this is definitely possible. And to be honest with you, you'll be surprised how little risk you have to take in these degen plays to create an income that is very sustainable and very substantial, even compared to a regular day job and stuff, by just kind of spreading yourself up. My journey quickly, and I'm not going to get into the details of it, I'll probably have some other videos down the road and to maybe go through this, because I have talked about this before, but having 20 plus years in the banking industry and all this kind of stuff, I came into this space like a degen. I put through a whole lot of money at nodes, which obviously is not diversification at all, causing quite a large loss of funds, more than I was willing to lose, not expecting that I was going to lose it all, but because I didn't diversify properly, because I didn't properly research what I was getting into and where my money was going, and because I didn't diversify, it created a big problem with my portfolio, which I, till this day, am still recouping. And I have to recoup it with a lot of extra efforts and a lot of extra time in order to get it back, because I'm starting from almost scratch. So what I did to help myself is I started earning incomes, trying to find places like Discords, modding, and different kinds of things like that to help earn myself some income to help get myself back on my feet faster. And now I've diversified that portfolio into something that I feel has got a lot of robustness, a really strong base to it, and now going from there. So we're going to dig into some things a little bit. I'm going to take you quickly to my YouTube channel. I will create chapters in this in case you want to come back to it, and hopefully you find a whole lot of value in the information that I'm kind of throwing at you here, and can help yourself maybe make a better, more balanced choice on how to grow your funds in the DeFi space without kind of taking one step forward, two step back, as many of us, I'm sure, feel oftentimes during this journey. So hopefully we can kind of stop that and create some really good ways of earning. When I'm doing this video series, I will give you ideas on how to very passively accomplish what we're trying to do, and then how to proactively accomplish what you're doing and learn a skill set, because I think that's also very important. It's great if you want to do this very passively. Luckily, there's options there. There is some added risk for those options within reason, and potentially some drawdowns to how much you could potentially earn, but also it usually will limit how much you can lose as well, potentially, with these different solutions. So and you'll see what I mean by that as we get into it. So welcome to my first video in this series. Hopefully you enjoy this about liquidity pools and liquidity farming, basically. As I said, this is going to be very overarching. There will be a lot of tools and resources that I'm going to give to you. I'll have those in the description down below, so you can grab those and make sure you get proper links for them. And that's pretty much about it. So we'll see you inside. Before we get started, I do want to appreciate this. We've hit the 3K subscribers mark. As much as like the number is not an ego thing or whatever, it's just nice to see that number grow, in hopes that it's meaning I'm helping provide some value, providing content that's meaningful to you guys, and I hope to keep expanding on that. And this series, I think, is going to be one of the biggest ones, I hope, and is my desire for this one. As you can see, in general, I'm not doing a whole lot of degen plays. If they won't go on camera with me and have a conversation with me, I don't care if they want a KYC to the world, but if a project won't take the time to have the CEO or the owner talk to me on camera, and don't believe in their project enough to do that, then I'm avoiding them. So today, like I said, we're going to go into liquidity pools, and we'll get into that in a moment. But I just want to thank you guys for the support and for the acceptance of the stuff that I'm trying to bring to you guys, the stuff I'm trying to do in this space to grow both myself and hopefully others in learning and adapting and realizing how to really play the space in a more lucrative way without taking on the risks that a lot of us have been taking going into crazy plays, which there'll be more of them coming back in the bull market. So do be cautious of that. Make sure you're playing with small portions of your portfolio and managing your portfolio respectively in order to make sure that you're doing right by yourself as these things and as these kind of shiny objects come to us. But using things like this conversation here to help balance your portfolio in a really productive way can be huge in maintaining your portfolio and growing it, as opposed to often what we end up doing, taking one step forward, 2 steps back. So thank you for all of that. And again, before we get into specifics, some general thing with liquidity pools, I feel that this is probably one of the best and probably most important investment tools inside the DeFi space. Why is that? One is there's zero Ponzi-nomics. Other than the regular, I mean, anybody can say Ponzi-nomics in anything technically to do with money, but theoretically there is no Ponzi-nomics. You are earning money from people moving funds around. Obviously, if people stop moving funds around completely and never transact on the blockchain, then this investment would not survive. So there is some Ponzi-ness, I guess, if you will, to it. But no more or less Ponzi-nomics than a bank. And this is why this one is probably the single most important opportunity inside DeFi, and especially right now that the bull market's hopefully coming and new money will be coming into the space, because you become the bank. Rather than you being gouged fees from the bank and them paying their CEOs exorbitant amounts of money for more than any individual ever needs in a lifetime or 10 lifetimes, you become the bank. You are the one supplying the liquidity that the banks are technically doing in the blockchain space. So you put up, let's say, USDT, USDC for the most simplest basic pair you can have. And you earn a return based on the fees that go between those. So if somebody has USDT and wants USDC, you're providing that liquidity, you get paid a portion of the fees. So those fees are then yours. They're dropped to you in different types of ways. They can be in stable coins, they can be in a DEX token. So for instance, PancakeSwap we'll go through very briefly here. But that one gives you a token called Cake, which does very well when the market is doing well, and obviously it doesn't do as well when the market's not doing well, but you're always earning it for free. So depending on when you sell it and whether you hodl it, you can earn quite a bit of returns on top of even just your base returns. As I said, a stable token like that where it's USDT, USDC, you're not going to see a whole lot of returns on that, but you still will get something in the fees, and it will still rival any bank interest rates, really. As you do that, or it'll come close to them anyways. If you were to do a pair like ETH USDC, you have something that's called impermanent loss. Again, I'm just going to very basically run through this. As I said, I'm going to give you guys some tools and some communities and some places where you can learn this. I guess before I get into this, actually, my Discord is a great first step for all of this. I'm hoping to garnish some more interactions in there, or my Telegram, but the Discord is where we have most of the talk. The whole idea from that will be a great place for you to talk for free. I am going to give you some tools and some resources of places where they might cost money, but I think there's always a good value to having a like-minded community that shares your passion and that hopefully will help you grow very nicely. So let's say you have a pair of USD, ETH. ETH value will go up and down, and as it goes up and down, it's creating something called impermanent loss. Now, like a stock, if you buy or sell it kind of thing, your impermanent loss is limited to when you sell that asset. The issue is you can actually experience impermanent loss whether the value goes up or down. So you have to be careful that you're within ranges so you're earning certain amounts. And look at it almost like a stock. If you buy a stock at $10 and the stock goes down to $8, you've lost $2. With impermanent loss, you will have only really lost half of that because you're going to rebalance it out with that other token that you've played it with. So it lessens your potential loss sometimes, but it also still adds a loss. And the reason why it says impermanent is it's only permanent when you actually sell the liquidity pool. So if the value of ETH goes down and your value of USDT stays the same, and you sell it, that's when you're experiencing that actual loss and you're locking that loss in. In stocks and all that stuff, it's called a paper loss until you sell it and realize that loss. Okay, so let's get into the nitty gritty. Let's get into some ways to do this. First thing I'd like to show you is in each of these videos is the passive way of earning this. And no, I'm not going to show you degens today, but I do think there's some value to this. I did a great AMA where Various and I went through all the details of 1.5. If you aren't in this, I think it's worth a look, but it is still a more degen-y BNB miner type dApp. But you cannot lose money with this. It's just it may take you longer if you don't earn it during the game. If it goes to phase 2, you start earning passively through liquidity pools, actually. So this is a cool way to have some fun and maybe expedite your earning process or your earning time if you do well with this game, I guess, if you will. But realistically speaking, what I more want to focus on is the farms. And the farms is your most passive way, literally the easiest way to get involved in liquidity farms. And I don't know if I mentioned it, and I apologize, when it comes to this part of your portfolio, in my opinion, this should be one of your biggest parts of your portfolio. The reason being is this is A, sort of the safest one, B, it's the backbone of crypto, other than the blockchain itself. And so because of that, I think this should be the largest portion of your portfolio. I'm not even exaggerating when I say it, of your portfolio, it should be 50% plus. That depends on a lot of things. So a lot of people come in and say, what should I buy now with $5,000 or $1,000 or $100? It's really hard to gauge that for anyone because you have to ask yourself questions like, what do I have invested elsewhere? Is this the last $100 I have? Do I need that $100 to survive, or will I need it to pay bills, or is this 100% risk money, risk capital? So based on the answers to those questions, that's how you should allot that money. If you are have the ability that you have maybe a lot of Roth IRAs or all this stuff where you have an income that you can survive on and this is all just play money, then you could maybe have a little more fun and do some more degen-y things. Do you need to do that? Not at times, no. And this is the other thing that I think a lot of people don't realize is if you actually take time and sit down and create a budget and create how much you'd like to earn or you need to earn to meet your goals or your aspirations or to leave a job or to go part-time or whatever the goal is that you have, you might find the amount that you need to do that is far less of a return than you think you need to get. You might think you need to double your money every 2 months, but really maybe you just need to earn 1% a day, which might seem like a lot, but it's not that crazy for this. Maybe when you really break it down, you only need 0.2% a day, but you maybe need to build to that. So you need some things to earn you, let's say 1 or 2, like liquidity pools, and then maybe you do some more passive trading where you're earning maybe 0.2% a day with a really slow bot that just sort of grinds its way up there. Again, these are all just ideas. You guys have to put yourself in the mindset and then start thinking of what works best for you. So getting back to this, farms is the most passive, in my opinion, and the best place to be with a team you can trust and with something that you know won't rug and just passively earn your income. And basically what you do is you spend $105. $5 of this goes to the Cycle C owners, so it kind of gives them a little bit of a bonus for being in early. And as new cycles happen, that same thing's going to happen. You earn 80% of what is earned from the money you're putting in because 20% goes towards other things. The reason for that is you're doing it passively. You literally you don't even have to click a button after you buy the NFT. These funds literally get airdropped to your wallet weekly on Wednesday, and you don't even have to do a thing. You don't have to come in every 60 days and click a button. You don't have to click a button every day. There's literally nothing you need to do. The funds just get dropped into your wallet. So there are people that are buying large amounts of these, and they even have, if you wanted to put larger amounts like 10,000 plus, there is different NFTs that give you some extra benefits for putting those larger amounts in and let you sustain a larger split for a longer period of time while you earn from them. So definitely something to look at. Come into their Discord, ask some questions if you need to get further information on that. But basically here you can buy any amount of these you want, and like I said, every Wednesday the money gets dropped to you. I mean, a great way to DCA into and it's not really DCAing in this case, but you can buy one of these a week. If you have $100 of free capital that you can invest in something, this would be a great place just to throw $100 and passively build your portfolio and allow yourself to earn passive income for doing nothing. Now, let's say that you want to do this, but while you're doing this, you'd like to learn. You'd like to figure out how this actually works and figure out how you're going to do this. So super, super, super basics. Basically, you come in here, you find a pool you like. You do need to be very cautious. You're going to see massive APRs sometimes on some of these, like 239%. There's always a reason for that, and the reason usually means that one of the tokens on one of the sides is a very volatile one, and so they're giving you incentive to invest in that one by giving you these massive APRs in order to convince you to put in that one. But then you need to manage it very regularly to make sure that you don't lose more money than you're gaining in rewards, and that's the risk you need to be careful of. As I said, it's really easy just to search for things like USDC and then grab USDT, USDC pairs. You're going to see lower APRs. I think this one ends up lower when you actually get into it because of the way it works. But there's lots of nuances to this, eh? So the issue with doing this is you need to know all these different things, and if you don't want to learn that yet, then that's where Monstros ends up being your better tool. So the full basics of it is you go in here, you click on this, you add liquidity. It basically will take half USDC, half USDT, and then it'll put it together to create this pair. So you'll need to have in your wallet those two things. Some ones like if you know, obviously EMP and AJ, they have Spark Swap. With that one there, they can actually zap the liquidity. So you can give it one asset, and what it'll do is automatically split it and then bond them together to create your liquidity pool. There's some that are more advanced that do those kind of things to make it easier for you. And some that even don't offer you the ability to lose through impermanent loss because they balance your thing differently. So there's lots of mechanics to all this stuff, but again, it takes a little bit of learning, a little bit of time to understand it. So a simple thing, like I said, if you want to go super simple, grab a stable pair, add liquidity, and that's the way you can learn and as you go and maybe test the systems for yourself. I find my best way of learning is actually doing it. So this is a good way to do it with zero risk, but very low returns, but at least it lets you play with it and understand it and see how it goes. And then you can start playing with pairs that are a little more volatile with higher APRs, but you need to be careful because, like I said, you will get a chance at impermanent loss, especially something like this, where if the value of the token ETH goes up and USDC stays the same, you're going to potentially lose more than you're gaining in rewards. The other ones you can get to are ones that are what we call, they're correlated. So as one moves up, the other one moves up as well. That would be something like Cake and it's not going to be exact, but Cake and BNB would be one. Actually, it's probably BNB. I don't know if I can search for it this way, but okay, but there is a Cake BNB one. I'm positive of it. And the thing with that one is they will be correlated. So hopefully, if one goes up, the other one goes up. And if they go evenly, again, there's no impermanent loss because they stay at the right balance. So just a little tidbit there. Now, if you want to learn this stuff, and we'll get into that in a moment. At the end of this, we'll go through where to learn, I guess, if you will. But before that, there's a couple of tools that are going to be very important that any person talking to you about this or teaching about this should show you. And one of them is DeFi Llama. The value of DeFi Llama is it shows you all the volume that's coming into the space and where it's moving around. And you want to find the places where the volume is its highest because that's where the returns can be the juiciest. But again, you need to manage that on an ongoing basis. To help you manage that, the other tool, and I actually got this from a group, and this is one of the main groups I'm going to talk about in a moment. I got this from the Underdog investor group. And this is the final tool I'll show you, and then I'll show you where to learn all this stuff. And like I said, put links down below, and then we'll kind of wrap this video up. But basically, Crystal acts as a portfolio manager almost for your liquidity pools. So it'll tell you what's trending, where the highest 24-hour fees are. It'll let you put in your wallet and manage your portfolio. It'll tell you where your pools are, which ones are performing well, which ones are not. So it's a very useful tool for managing this space. And I think everybody should get to know this if this is a desire for you to become kind of a liquidity pool manager, or is that if that's going to be part of your DeFi portfolio that you're managing proactively. So hopefully that's added a lot of value. To close this off, like I said, where to learn these things, I would recommend coming by my Discord at least as a first step. In there, the links that are even in this Discord, I'll probably have them in there, or my Telegram. That's all free. The community is growing. We're getting a little bit more active, which is nice, and people are there to help, which is awesome. Secondly, though, I do find having a place to learn with a bunch of like-minded people that are maybe swimming in this sector of the space with you is always a good idea, especially if you're really eager and really wanting to learn this stuff and really grow how you're interacting with the space, then doing something like the Underdog Investor Group, Sleep Money Club, James Pelton's Discord, and the Passive Income Engines, I believe that James Pelton has is teamed up with some people. These kind of paid groups, and another one coming up actually called Project 2033. I'll be a little involved with that one as well. With these groups, oftentimes, like I said, you're going to find like-minded people that are going to share this stuff, and people that are really deep into it that love helping others. And when you find those passionate people that love helping others, that's where you're going to find some really juicy learnings and really juicy rewards that you can find in this space. And oftentimes, it's not like signal selling. You'll have some good ideas of where to move them, but it'll help you learn as you learn, and really helps you see it all in action, and then you can start making your own decisions up and help yourself build your own portfolio that is unique to you, that hopefully does just as well or better. So that's really about it. Please let me know in the comments if you found some value to this video and if you'd like to see more like this. It does really help me, energize me to make sure that I'm focusing on stuff that's going to add value for you guys. And like I said, come by the Discord. The Underdog Investor Group link I'll have below somewhere. I'll try and find that out actually. If you want, search Crypto Labs. That's Lucas's YouTube channel. Lucas and Colin kind of run the Underdog Investor Group, and I think they're growing a team kind of thing there. Lots of great advice, great input, great people in that space. Sleep Money Club is another one that I've seen and been involved in, and just see a whole lot of people, passionate people. And you really want to get into this stuff now before the masses come in, because it gives you a great chance to learn almost one-on-one with people, which is an amazing opportunity to do so. So awesome. Thanks so very much, guys, for all your support and all your viewings and all that kind of stuff. Do check out the Discord for Monstros as well, and then seek some of those information. Not every community is going to be the right one for you, so I do get that. A lot of times they have 7-day trials, or if you get in and you find it's just not the right community for you. But I do feel some value in finding one, and I do feel there's a lot of value to paid ones, but you also can get lost paying for too many. So just make sure you find one that really works for you, and really has a community that kind of speaks to you. That's so important. So thanks so much, guys. Have yourselves a wonderful rest of your day.